The UK stock market is feeling the heat as US banking woes spark global jitters. In a dramatic turn of events, the UK stock market has taken a significant hit, with a warning from two US banks sending shockwaves across the globe. The revelation that Western Alliance Bank and Zions Bank had encountered issues with bad or fraudulent loans has sent investors into a tailspin, sparking fears of potential problems within the banking sector. Some of the UK's biggest financial institutions, including Barclays and Standard Chartered, witnessed a sharp decline in their share prices, with a drop of over 5%. The FTSE 100 index, a leading indicator of the UK's stock market performance, experienced a drop of around 1.5% before recovering slightly. This ripple effect was felt worldwide, with stock market indexes in Germany and France also taking a hit. On Thursday, Zions Bank announced a $50 million loss on two loans, while Western Alliance revealed it had initiated legal action alleging fraud. Ross Mould, investment director at AJ Bell, commented, "Pockets of the US banking sector, particularly regional banks, have given the market cause for concern. Investors are questioning the recent spate of issues and whether they indicate poor risk management and lax lending standards." Mould added, "Investors have been unnerved, and while there's no evidence of issues with UK-listed banks, they often react impulsively when problems arise within the sector." The impact was not limited to the UK. Bank shares in Europe also suffered, with notable declines in Germany and France. Asian markets felt the pinch earlier on Friday, with Japan's Nikkei index closing down 1.4% and Hong Kong's Hang Seng index ending the day 2.5% lower. However, there's a glimmer of hope for some of the US banks that faced the brunt of the sell-off on Thursday. In early Friday trade, shares in Zions Bank and Western Alliance Bancorp showed signs of recovery, gaining around 2% each after their respective drops of 13% and almost 11% the previous day. In a recent interview, Kevin Hassett, director of the White House National Economic Council, described these issues as messes inherited from the Biden administration. He assured, "The banking sector has ample reserves, and we're confident we can stay ahead of the curve on this." Investor nerves have been on edge following the failures of two prominent US firms, Tricolor, a car loan company, and First Brands, a car parts maker. These failures have raised concerns about the quality of deals in the private credit market, where companies secure loans from non-bank lenders. Jamie Dimon, CEO of JP Morgan Chase, the largest US bank, warned this week that these failures could be a harbinger of more to come. He stated, "When things like this happen, my antenna goes up. I shouldn't say this, but when you see one cockroach, there are probably more. Everyone should be on alert." Adding to the concerns, there have been warnings about a potential bubble in the US stock market due to the surge in artificial intelligence investment. Mr. Dimon himself has expressed these concerns, leading to fears of overvaluation in the market. The market turbulence on Friday saw investors seeking safe havens, with the price of gold reaching a new record high of $4,380 per ounce. The VIX Volatility Index, often referred to as the Fear Index, hit its highest level since April, reflecting heightened market anxiety. And this is the part most people miss: the potential for a controversial interpretation. While the immediate reaction to these banking issues is understandable, some experts argue that the market's knee-jerk response may be overblown. With robust reserves and a generally healthy banking sector, could this be a temporary blip on the radar? What do you think? Share your thoughts in the comments and let's discuss.